In this presentation, we will take a look at health savings accounts, HSAs, as they relate to income taxes. We'll be focusing in on the deductions or adjustments to income, above the line deductions or Schedule 1 deductions, as opposed to standard deductions and itemized deductions. We're considering those deductions on the first page of the 1040 that can be summarized on 8A, and then the supporting documentation would then be on the Schedule 1, Part 2, Adjustments to Income. We're focusing here on line 12, Health Services Account Deductions. We would then see Form 8889, which would be another form that would be attached, supporting the 600. The 600 here then adding up to the Adjustments to Income, which would then be found on the first page of the 1040. We also note that you may receive a 1099. We'll talk more about this later. 1099 SA, related to distributions from an HSA. So remember, when we're thinking about a health savings account, there's two sides we want to think about. We're putting money into a health savings accounts. What's going to be the tax effects of that? And if there's distributions, are there any tax effects of that? Now, when we think about a 1099, we're typically thinking about something that may have to be included in income. So that's the question usually with a 1099. The question is, here's a 1099. Is this something that I have to include in income? So this would be on the distribution side then, rather than putting the money into the HSA. We're going to focus more on putting the money into the HSA, which could result in our deduction. We'll talk more about this 1099 SA as it relates to it at the end of this as well, however. So we have the health savings account, and HSA, which is tax-exempt saving account that can be used for qualified medical expenses. So a tax-exempt savings account, the health savings account. HSA can be used to pay expenses of the account holder, spouse, and dependents. Generally, a qualified taxpayer can take a deduction for AGI for contributions to the HSA. So why would we put money into an HSA? It's going to be a type of savings account, so it's a savings account for us, therefore it's still our money, but it's under the umbrella of the HSA. We're mainly putting it in there in a similar fashion as why we would put money into a 401k plan or an IRA, because we're going to get a deduction for AGI, an above the line or Schedule 1 type deduction. We also have the tax exempt savings for it. What do we have to do in order to qualify for that? The money that goes into the HSA has to be used to pay expenses of the account holder, spouse, and deductions, medical related expenses. Health savings account eligibility. So who's eligible for the health savings account? Remember, when we think about these items, we're thinking about, one, the data input. How are we going to put this into the system? So if there's going to be amounts that were put into the health savings account and we're actually in the data input portion, then we're not doing the planning portion, and it's just basically what is at this point in time so that we can populate that information into the tax return. Then we have the concept of tax planning. Is a health savings account something that you might want to mention to someone while you do the tax preparation as something they could look into in the future? So who qualifies? Who might be eligible for the health savings account? Taxpayer must be either self-employed or an employee or spouse of an employer with a high deductible health plan, or an employee of a company that has no health coverage and who has purchased a high deductible insurance policy themselves. The taxpayer must also have no other coverage with the exception of some specific coverage. They may not have other health insurance except for accidents, disability, dental, vision, long-term workers' compensation. So here's a little bit of detail on what a high deductible plan is, an HDHP, a plan with specified minimum deductible amounts and a maximum annual deductible, as well as out-of-pocket expense limitations. So we have the individual coverage with the minimum deductible and annual out-of-pocket for $1,350, family $2,700, and then the maximum deductible $6,750 and $13,500 for family. Form 8889, contributions or withdrawals from an HSA must be filed using Form 8889. So this will be an attachment to the Form 1040. If contributions are made by a qualified individual in accordance with limitations, a deduction for AGI is allowed. Distributions from an HSA are tax-free distributions if they are used to pay for qualified medical expenses. So again, there's two sides to this. One, we're going to be putting money in. It's going to be similar. You can think about it in a similar fashion as an IRA or retirement plan. You got the benefit of putting the money in, where we're looking to get that deduction, and then you got the time period where the money is taken out. And as long as you paid in accordance with what you're supposed to be paying for a health savings account, which would be medical expenses, then typically it wouldn't be taxable out as you pull the money out. However, if that were not the case, then you may have a taxable event at that point in time. Here is an example of Form 8889, the Health Savings Account HSAs. You can take a look at this and get this form on the IRS website, as well as the instructions related to it for more detail with it. We'll also take a brief look at it as we look at the accounting software in a following presentation with regards to health savings accounts. Here's the second component of it, or part 2. Here is part 3. And then once again, here's that form 1099-SA. So remember, the 1099 is a form where you're thinking, oh, is this something I have to put into the income line? Is it something I have to include in gross income? So when you receive this form, then you're going to have the gross distributions. And the question then is, well, did they actually pay those distributions for qualified medical expenses? If that is indeed the case, you'll probably have to enter the data into the system, but it shouldn't have an effect on the taxes. So that's what you're basically hoping for with the 1099. This is a distribution, meaning someone put money into the HSA and it's now being distributed. The distributions could hopefully are coming out. So they're basically, you can think of them as going to the taxpayer or at medical expenses. However, as long as those were paid for the qualified reasons in order to be tax exempt, then they shouldn't be having an effect on the taxable income, shouldn't be increasing the taxable income.